Smoke weed every day. Smoke weed every day.
Hey guys, it's Random Studies here, and today we are basically doing one of the most crucial parts in accounting, which is the one and only income statement. Alright, now get this, okay? You're basically gonna get income statement in some other form, one way or another in accounting, alright, throughout, okay? So get this, okay? You wanna know this really well, okay? So let's just start, okay? Now, an income statement, right? Okay, the main reason why we make an income statement is to basically calculate our profit for the year, okay? Profit or loss for the year, okay? It consists of two things, okay? Consists of two sections, okay? One section is the trading account section, which stops at gross profit, and the other section is the profit and loss account, okay, which stops basically at net profit, okay? Net profit is the last profit, and it basically calculates the profit for the year, okay? Gross profit, what is gross profit? Gross profit is basically the profit made by selling all goods, okay? It's not the profit, the total profit of the year. It's basically the profit made by literally only selling goods, okay? And in order to get that, let me show you how to do the trading account, okay, which is the start. Okay, so basically when you want to make an income statement, right, first thing first, you want to write the heading, okay, which is usually like income statement or Sandy or whatever for the year ended 30th April 2005, okay? Now the thing which you want to keep in mind is that usually in questions, right, they give you another date just to confuse you, like, wait, let me show you this one. All right, I don't know if you guys can see it. You can see fixtures and fittings at 1st May 2004, okay? And basically this income statement is for 30th April 2005. So that question which I just showed you, that fixtures and fittings, that's going to be irrelevant, okay? Because they just put that to confuse you, alright? So you want to basically just ignore that shit. Okay, so moving on, okay? So yeah guys, moving on, alright? So the first part of the income statement is the trading account, right? So basically the first thing first, you always want to go with revenue, okay? So revenue is basically the main thing of the business, okay? It's like the starting capital, so you always got to put that shit, okay? And if you guys are wondering why I put that dash there, it's because usually we minus it with sales returns, okay? And if that's not there, okay, you basically just put a dash and you put that number back down, okay? Now the next thing, alright, which comes is less cost of sales, okay? Now in less cost of sales there are many things, okay? This is basically the main thing to calculate your gross profit, okay? So alright, in the less cost of sales there's opening inventory, okay, which usually be here. Oh shit, where did the question go? Alright, just one sec. No, alright, there you go. Okay, so basically opening inventory, right, usually it's given over here, okay, in this trial balance. But if it's not given here, right, they usually give it in the additional information shit. So stock at 30th April 2005 was valued at 12,600. But if you can see, right, this shit is at 30th April, okay, which is basically at the end of the month, okay? So that shit is not true, okay? So over here, this is the true one. Stock at 1st May 2004, which is 13,350, and yep, that's what we gotta write, okay? So get this, okay, these fuckers really want to confuse you, okay? So don't get confused, okay? Literally read the question very carefully so that you don't fuck up, okay? It's very important you read the question super properly. Okay, so the next thing is add purchases, okay? So yep, I have nothing to say for that. Purchases is really clearly given in the trial balance always, okay? They don't try to fool you with purchases, so don't worry, okay? and if there are any purchase returns, you do minus it. Okay, but usually they don't like give that shit. I just saw it here in the textbook. As you can see, it's saying less purchase returns, and that's why I just want to let you know. Okay, and then there's less goods for own use. Okay, usually even that's not given, but you know, I'm just telling you right now. And then it's carriage inwards. Okay, not outwards, it's inwards. Okay, and yeah, you just put that there, and you basically just minus it with closing inventory. Okay, so carriage inwards is, by the way, to be added. Okay, so after add purchases, right, you end all of this bullshit with closing inventory. Okay, which again might be given in a trial balance or right here in the additional information. Okay, over here it said it's 12,600, so yup, I basically did that. Okay, after that you just basically do the calculation. Again, it's super important. What you have to understand, what has to be minus. Okay, closing inventory has to be minus, less goods for own use has to be minus, purchase returns have to be minus, carriage inwards has to be added. Alright, so after you've done with all that shit, okay, you minus this with this. Okay, you'll get an amount. Okay, that amount is basically your gross profit. Okay, so get this. Okay, you're probably gonna get shitloads of marks even if you reach till here. You'll probably get like 7 if it's out of 16. Okay, so yeah, or 8 if it's out of 16, because you have done half of the income statement correct. So yeah, bro, you're doing pretty well. Okay, moving on. Okay, usually after the less cost of sales, now we're moving on to the other section of accounting, which is the profit and loss account statement. Okay, and that is add other incomes. Okay, now usually that shit also isn't there, but if it is there, get this. Okay, here's a trick to find out if it's like a part of other incomes. It will usually have a received in it. Okay, and if there are any add other incomes, please do add it and just put that shit down. Okay, now the other crucial part of the income statement is less other expenses. Okay, this shit is super important. Okay, less other expenses have basically all expenses. Okay, it's kind of obvious. So like wages and salaries, discount allowed, general expenses, property taxes, loan interest and profit for the year, blah blah blah. Alright, so basically usually, right, when you're doing income statement, right, like the advanced level, they basically give you terms like this. Okay, which basically are like, what the fuck is that? But let me tell you, okay, there are quite a few which you gotta remember. Okay, this one is accrued. Okay, accrued is basically adding. Okay, prepaid means minusing. Okay, and yeah, depreciation basically just doing the percentage and shit. Okay, there is no minusing with the percentage, just put that number right there. Okay, and okay, yeah, so basically I think I'm pretty much kind of done with it. Okay, and yeah, that's basically all you gotta do. Okay, it's not that much, it's pretty easy. As you can see, it's not that confusing. I mean, I swear, like, if you just keep on doing it, you'll get the hang of it. And yeah, man, that's basically how you do the income statement. Alright, peace on the streets, son.